huge penalties. Yeah. Sometimes they get completely unreasonably high. Lenders use either 3 months of interest or the interest rate differential, which is a convoluted formula that nobody really knows which lenders do which. So basically it comes down to the lenders can charge whatever they want, is what it feels like. That being said, sometimes it does make sense to break a mortgage that has a bad rate of interest or relatively bad. For one of my own rental properties, I just broke my mortgage. I had 1 year left. The rate was at 5 1/4. And what I chose to do was actually go into a variable rate at 2 1/4, so now 3% off the rate. The numbers turned out to be, the penalty was $12,000. Now this was down from the previous year, it was $35,000. So over that 12 months, the penalty had reduced dramatically to the point where it made sense to do the deal. I ended up saving $22,000 in interest for the same period of time, so I was essentially ahead by around $10,000. What I did as well was, had the payment reduced by $1,000 a month, and also set up a home equity credit type product on that property. So knocked off a bunch of the monthly payment, made the property perform so much better. Set myself up for the future to get the equity back out as I paid down that mortgage, and that deal made sense. So you really want to look at each individual mortgage. It's going to change day to day as the penalty changes with the relative rates that you're going into, and it's really just a matter of keeping an eye on the mortgages you have and the rates you could get to see if it makes sense to break any of those mortgages.
Thank you very much. You're at a high rate, and the lender has a choice to move you down to a lower rate. And they don't. What they say is, if you move down, we're going to charge you a penalty. And they have the option to charge you a 3-month interest penalty. But they don't. They charge you an interest rate differential penalty that is a final figure, and oftentimes it's difficult to get them to divulge how they arrived at that number. And one thing's for sure, you don't go to court without a lawyer. You definitely need to have an advocate in your corner to try to do it. A lender will often give you a verbal quote. That's one of two things. It's abnormally high, so it scares you off from wanting to make a change. Perfect. They didn't even have to lift a finger. The other one is it's too low, and then you verbally, and then when you go ahead and change everything, you go to the lawyers, then you get, it's not 3,000, it's 30,000. The panelists up here today are used to navigating those waters on a daily basis. You definitely need a second opinion, and a second opinion should not come from another employee from the same lender that's either holding you at a high rate or holding you charging the very highest penalty. It requires a lot of experience and expertise to be able to extract out and break down just what those penalties are. So many of you in the audience, I'm sure, are held up mortgages right now, and taking a quick look at it is definitely advisable, and being able to understand exactly what the penalty is and if it's most prudent to change it. So thank you very much, Reed. Over to you, Jared.